I'm David Gerard, and this is Pivot to AI. Talk about your money edition. Today, I'm dressed in my money clothes. This will be a long one, but we got to get to the true economic roots of the AI bubble. Fundamentally, that nothing works and everything feels a bit like a scam. This has consequences at scale. So, venture capital firm Andreessen Horowitz, affectionately known as a16z, that's not Z but Z, is looking for investors to put $20 billion, with a B, dollars into AI startups. For perspective, that's more money than all of US venture capital funding in the first 3 months of 2025, which was about $17 billion. This means a16z thinks there's at least that much money, billions, sloshing around, desperate for a home, desperate for a return. We'll get into that in a bit. PitchBook says a16z is talking up its links to the Trump administration to try to recruit investors. The pitch is get on the inside of the corruption. This may imply a less than robust and strictly rule of law investment environment. So, how's venture capital going in the US? Not so great. There's not much action outside AI. Or outside OpenAI, really. So, what is the state of venture capital in 2025? Venture just has not been giving investors actual returns for a couple of years now. We wrote up the PitchBook Venture Capital Report a while ago for the third quarter of 2024. PitchBook's report had a lot of numbers in it that looked good, but they were hiding a moribund investment landscape. A lot of the numbers were aging startups that should have exited by now. They should have been acquired or gone public, but they couldn't. They had high valuations, but the valuations are imaginary, and nobody really wants to look inside the box and risk having to write down a smaller number. Quantum uncertainty, that's the way to go. Much safer. You can't take companies public for a big win in the US lately. The markets were bad before the Trump tariffs, and now they're looking like trash. And Mr. Trump is unlikely to calm down and bring stability. For your startup to exit, you'll need to sell it to one of an extremely few bigger companies. PitchBook has its Q1 2025 Global VC First Look spreadsheets just out. In short, venture capital is split between AI and everything else. And when they say AI, they mean OpenAI. Everything outside AI funding has declined. I didn't go through PitchBook's fourth quarter report line by line. I am waiting on the 2025 first quarter report, which should be out any moment. But here's a nice quote from the fourth quarter report. On the deal-making front, the spending spree on AI also provides a false sense of growth in the market. Excluding deals for Databricks, OpenAI, xAI, Anthropic and Waymo reduces the total amount invested in the market by more than $42 billion. Removing the 15 deals over $1 billion reduces the total investment in the market by $53.5 billion, or about 26.5%. That would place 2024 on par with 2018, on a deal count that is roughly 1,500 higher. That's more or less what we said in September about the third quarter report. The numbers look better on the surface than things actually are, and they were doing their best to present bad news as okay news. They can't really pretend anymore. Apart from a bubbly bubble at the top end of AI, it's a bit obvious things aren't going so well. The AI bubble has zero to do with the actual technology. That's a big statement. I used to say it was very little. I'm going to say right now it is zero. The tech is an excuse to claim magic is happening and basic common sense and arithmetic don't apply anymore. It's a new paradigm. if they thought they could talk up 1964 model ELIZA chatbots into a tech bubble, we'd have nuclear power plants being restarted to run 1 trillion copies of ELIZA. You need to know a bit about the tech so you can say, wait, you're talking rubbish. Large language models don't do that. They don't work for what you're claiming. But mostly, you need to understand the point is to build a bubble machine. There's hundreds of billions of dollars, trillions of dollars in family offices, pension funds, sovereign wealth funds that are desperate to find returns. The economy is out of steam because we keep not taxing these guys until the pips rattle. So the poor can't make the money they need from work, so they look for lottery winnings. This sucked a lot of ordinary people into crypto last bubble. But the rich can't make the money they need from business. They're looking for lottery winnings too. Again, crypto a few years ago. And when I say the rich need a lottery win, I do mean need. This is why pension funds get into crypto garbage and so on. They need that level of return. They're mandated to seek it out. Venture capital funds made the same sort of promises. The AI bubble is fundamentally fueled by too much money that can't get sane investments, so it's looking for insane ones. There's a real tech revolution going on right now. It's renewable energy, wind and solar and batteries. These are all super cheap, getting cheaper. The tech is advancing by leaps and bounds. It's doing amazing stuff. But that's a real normal business that doesn't offer venture capital a lottery ticket. So if you want to know about it, you have to look it up in the specialist press. It doesn't get hype-filled headlines from venture capital press promoters in every newspaper. Back in early 2024, a pile of people were giving the AI bubble 3 quarters until it ran out of steam, 9 months, say end of 2024. Ed Zitron got some attention for saying, quote, "I believe that artificial intelligence has 3 quarters to prove itself before the apocalypse comes," unquote. We're here in 2025. It hasn't collapsed, but we're seeing some wheels start to look very shaky and coming off soon. So Ed didn't call an actual collapse, but I think what he was seeing then is happening now. But I want to say it wasn't just Ed. I was talking to a pile of people around this time who worked in the companies. They worked in the AI salt mines. They gave the same sort of estimates. It had about 3 quarters of life in it. I think these estimates only failed because they assumed any of this was sensible, which it's not. My numbers in April 2024, I gave this bubble 2 years. It might go longer. Amy Castor, formerly of Pivot, has long maintained that really stupid scammy things, and the AI bubble is very stupid and scammy, always run longer than you expect, because they're being run by scammers preying on the stupid. We also need to remember that in venture capital funding, they try extremely hard never to convert things to actual cash dollars. This is what I meant, never put a loss written down on the books. It's all book entries with a $sign on the front, and trading book entries for other book entries. If the number in the book goes up, it all is well. You can kite checks for years until the thing that isn't technically a Ponzi scheme, it just works like one, has to show its actual cash value. I've got readers and viewers who ask me for investment tips. I mean, I'm literally paid to do finance journalism. I used to cover crypto closely and talk about what it was doing. And Pivot is really a blog and channel about finance and economics with a tech flavor to it. The bubble is an economic phenomenon, not a tech phenomenon. So our big problem right now is that speaking objectively about observed facts and reality, President Trump's blowing stuff up. We can blame one guy, and he's that guy. There is no certainty, and nobody can tell what he's going to do tomorrow. The US doesn't have the method we have here in the UK, where when Liz Truss became Prime Minister, she crashed the economy immediately, and she got kicked out in just a few weeks, which was lovely and wonderful. but you got this guy for the next 4 years. So I don't know. I've got a lot of worried American friends wondering what the heck to do with their retirement money. I really don't know. I don't know what to advise you. There are no safe havens in the US. Maybe outside? Your financial advisor is probably quite busy right now, but give them a call anyway. Try to talk to them. I must state that I am not your financial advisor. But I mean, definitely don't get into Bitcoin, for example. You're not going to gamble your way out of this one. And I don't think venture capital is going to gamble its way out of this one either. Anyway, I think a16z is going to get $20 billion of desperate big money for this fund. They'll put it into AI startups and they'll tout imaginary valuations as long as they can get away with. Then, if any of the startups are winners, a16z gets the credit, and if they mostly lose, then nobody mentions it much. Your investments may go down as well as up. It's all broken, nothing works, everything feels like a bit of a scam, and business can't plan ahead further than lunchtime. Perfect conditions for AI to linger way longer than it should. I do not expect to run out of stories any time soon. And on that happy note, thanks for tuning in to Pivot to AI. Remember to hit like and subscribe on this video and tell your friends. There's the Patreon in the show notes, because I use money too, and it's cheaper than analyst newsletters, and it's frequently better. Thank you all, and bye for now.